That's awesome.
You know, and then you can go and buy your crypto with that, and then, you know, God willing, it blows up, and now you're like a bajillionaire with no income tax.
You got nothing to worry about,
Whether, depending on like different levels you are, like in financially, you know, when you're going out for loans or you're going to try to get approved for loans, whether through a bank or whatever it may be, will banks look at also, like, say you have equity in a business, even though it's not necessarily something that it's like liquidity that, you know, you're using to go ahead and pay for your goods or your expenses, whatever it may be, but will they take that into consideration? Like, you know, my business is worth X amount of dollars, I have, you know, 100% equity in that business or 80% equity in that business or whatever it may be. Do they take that into consideration? Like maybe it's something that, like, if you were to have any issues, you would have that as collateral. But I think about like I don't know, like if you have, you know, an LLC and that LLC, maybe you're not taking income from that LLC, you're using it for other purposes, but that LLC or that business with itself, you know, does a lot of revenue every year. Would they take that into consideration? Like, hey, this person has access to capital or liquidity, or he owns a business that has this type of, like, you know, revenue within their business.
So if I give you like the simple answer is going to be no.
Okay.
They don't consider it. But it's more complex because you just mentioned something. You said you're not taking income, but it is generating income. So that's a very like gray thing you just mentioned. You said there. So for example, if the business is making income and you're in a 1065 or an 1120S, it is being rolled into your personal tax return. So it is going to show. So now the income you're earning will show on your taxes, and it will show on your financial statements. Now, in that scenario, yes, it will help. In this scenario that it is literally not doing anything and you just have a business, is it going to matter? No, it won't matter. Because if you're going to apply for a loan and you had a business that's 10 years old, but it's not generating any income, then it's really not doing anything because you have to have a cash flow to justify most loans are based off of the cash flow being brought in. So depending on your cash flow will determine how much of a loan you can get. For example, say you owned a property, and physical assets are a lot easier to get loans on than equity in a business, because goodwill in a business is really hard to determine without any cash flow. Now, if you did have cash flow, then goodwill is being determined based off of the cash flow. And then you can get loans based off of that. And a lot of times they'll give you the loan based off of your accounts receivable and accounts payable, about inventory, and which is some form of either tangible or intangible asset or value to your company. Your like collections that you have. So we're going to front you $150,000 because you have $150,000 of collections. It's going to eventually come in. We're going to front you this money, so you're not lulling in your business. You can continue buying more product, so you can keep your rotation better. So it's yes and no. It really, the details matter, and that's why we have a good accountant, you have a good team, a finance team, which is going to know those answers for you. And that's what you get in like part of the financial review. Because if you have I'm a strategist. So I have the accounting firm, I have the mortgage company, I have the insurance agency, but I strategize how to optimally use them. Just because you know mortgages doesn't mean you know how to properly use it to maximize your finances.
Got it. Yeah, so a lot of times context matters, and so that's why it's really good to have like professionals on your side, behind your back, like supporting you, to have your back, because they can take your context and say, hey, you go online, they're going to tell you that generally, no, you can't do X, Y, Z. But because I'm your guy, I'm your professional, I know the full context of like your whole situation. Like you do my taxes, right? You know that I have, a business, you know that I have a W-2 income, you know that I have a home, like you know my full situation. So you're allowed to, it's easier, I get a lot more benefit from having you as my guy, who I pay, as my advisor, who I go to, versus me going online and just getting generic information, because the generic information is really, really good. It's really important, but that's just the starting point. It's having someone like you that you can say, okay, you know what, like this is my situation, like what can I do? How can you help me take this and make the next step to even grow that even more? Because I think about because my businesses, they're fairly new, right? And so if I'm making money, I'm not taking in that money. I'm trying to put that money back into the business to reinvest in the business, to grow the business. So there's probably a lot of people out there that are doing that same thing. And so like if someone is making money, but they're putting that money back into the business, does that impact how they say they wanted to also go ahead and get, you know, rental properties and they wanted to do that? Can they use that money can they use that information, that income, that even though they're putting it back into the business, can they use that to help them kind of to leverage to get a loan? Or is that something that they can't use? Like, what would you say to someone that's in that situation?
So you asked like a lot of great questions, and they all are different.
Yeah.
Right? Because you mentioned a lot of good points, but they're all different. So one thing you mentioned, and we kind of got off topic of the entity side of things, but the story itself changes what can be done.
Yeah.
For example, a good example now, everyone online is talking about pay your kids, avoid $12,000 of income tax. And some people are saying, yes, you can do that. Some people are saying, oh no, you can't do that. So the point with that is it's your story that matters.
Yeah.
So you might not be able to do online, you might have a yes and a no answer. And you're like, which one applies to me? Your story will determine if it applies to you, because it is the context that determines if it is applicable. So for example, can you give your kids $12,000 and avoid $12,000 of income tax off of your taxes and reduce your tax bill? No. You cannot give your kids $12,000 because you're avoiding taxes and that's illegal. Can you pay your children $12,000 for doing something towards your business? Yes. What can a 2-year-old do? Well, you could pay them $12,000. Well, they can be in all of your corporate advertising, and now you're paying a child for marketing.
Yeah.
Because if you hired a actor, you would pay them that money. So now you're compensating them for something.
Yeah.
And then you see all those little cute kids in the commercials, and they're like, they're like, say like the Bible verses or something
for
cute,
sure,
you know?
For sure, that's good.
Well, you paid them as an actor, so they're being compensated for something.
Yeah.
Right.
Yeah,
so that's the intent of it. Is what's the story? What are they doing? What it was? Okay, you could technically pay your kids to clean the house.
Yeah.
Because you would have to pay someone else to clean the house. So it needs to be a marketable rate as well. Like you can't say I'm going to pay them $100,000 for something. There needs to be a marketable rate.
Sure.
And hack, if you're going to hit the advanced level of that hack, since they're going to be compensated and you're going to pay them $12,000, it reduces your income tax. They're going to be taxed. Their tax of $12,000 is basically zero because the first $12,000 is usually forgiven. There's no tax on that. At that point, if you have a corporate 401k, in that account, you can choose to have a Roth contribution. And if you have a private company, your flexibility in that account is more. So there's a possibility that the child could contribute all $12,000 of the income that they earn, that they are not taxed on, into a Roth 401k at the age of 10.
Yeah.
And have that money grow until they're 65 tax free.
For sure.
So
that's awesome.
And then you can go and buy your crypto with that, and then God willing it blows up, and now you're like
Game
a bajillionaire with no income tax.
You got nothing to worry about. Yeah.
But so again, it's the story determines it. It's not a blanket statement that rich people don't pay taxes. Well, not all rich people. Like if you're a boxer, you're going to pay a lot of taxes because you have earned income. But if you're a rich person that owns a company and you're constantly reinvesting and you're investing in employees, R&D, property, now you get a significant amount of tax write-offs because of that, and that will change your story. It changes your tax.
Got it.
So it all matters.
So if you want more content, smash the like button and subscribe to the channel. A lot more content coming. We post at least once a week with lots of great financial information to help you build your personal portfolio.